Bismillahirrahmanirrahim. Assalamu alaikum. This is Hira Mujahid, and today we will discuss the chapter Measurement and Structure of National Economy from book of Ibn Bernanke. Um, in this chapter, we will discuss some of the conceptual and practical issues involved in measuring economic activities. We focus on national income accounts framework of measuring economic activity that is widely used by economic researchers and analysts. Uh, the content of this chapter would be as firstly, we will differentiate among the three approaches of national income accounting. Then we will discuss how a GDP is measured. Then we will discuss measure of aggregate saving and its relation to GDP. Then we learn how to calculate real GDP price indices and inflation. Finally, we will discuss the difference between real and nominal income interest rate. National income accountings are an accounting framework used in measuring current economic activity. These accounts are based on the idea of amount of economic activity that occurs during a period of time can be measured in terms of three approaches, right? A product approach, income approach, and expenditure approach. In product approach, you will calculate the amount of the output produced. Excluding output used in intermediate stage of production. In expended income approach, you will calculate the income received by the producers, and in expenditure approach, you will calculate the spending by the ultimate purchaser. Right? I'm going to explain these three approaches. With the help of this example, let's suppose there are two companies, Orange Incorporate and Juice Incorporate. There are two companies. I mean, these are the transactions of these two company, a simplified transaction where you can see their revenues and their expenditures. Orange incorporate transaction. Let's suppose the wages paid to Orange Incorporate employees are 15,000. Taxes paid to government is 5,000. Revenue, this company is generating revenue from two sources. From the public, one is from public, and another is from the Juice Incorporate by selling their oranges to these two group of people. Group of people, right? Revenue received from sales of oranges 35,000. Let's calculate their income before profit before tax and profit before after tax. uh, Profit before tax is equals to what should be right, the revenue minus their cost, which is 20,000, right? I hope you have an idea of calculating the income and the profit. Profit after tax would be uh, 20,000, the profit they get before tax minus the tax this company paid, which would be 15,000, right? This is for the Orange Incorporate. Let me put it somewhere on the top. Okay, now we have to calculate the before and after tax profit of Juice Incorporate. I suggest if you write it by yourself. Let I am writing it for those who don't understand, who cannot calculate it, right? I'll suggest you to just pause this video and calculate it by yourself. Let's suppose the income of revenue or profit. Let me write first. Juice Incorporate, right? Revenue they get is from 40,000 minus wages. They not only paid the wages, but also they also bought some of the oranges from the juice from the Orange Incorporate, right? So these are the two major expenses of Juice Incorporate. After subtracting it, that you can get 5,000. I hope I am not wrong, right? 10,000, right? Fine. Now, um, after tax, profit after tax. This is the 5,000 from before profit after tax. I'll suggest if you write the value somewhere, because after later we have to use these values on and off. So it's better if you write it down somewhere, so you can easily get what later you will get what I am telling you. What I've Okay, 5,000. If you subtract 5,000, if you subtract 2,000 from 5,000, you will get 3,000. This is the tax. This is the amount you paid it the company paid uh, in for the for to government, right? So 3,000 is after tax amount, uh, right? Now we will discuss product approach, income approach, and expenditure approach. uh, Let me write it. The What is product approach? It's measure the economic activity by adding the market value of goods and services, right? What is the market value of orange transaction? Is 35,000, right? 35,000. And what is the value of market value of juice in coffee? Is 40,000. But how do we calculate it? First we will we should add the values of orange and juice in corporate, but there is a problem of double counting, right? If you see that this 35 includes this juice orange, this sale of orange incorporate to in juice incorporate, which is for 25,000, right? We have to subtract it from juice in corporate transaction, then we have to add it. How we do it? Let me write it somewhere so you can know what I'm telling you, right? um, Orange org, I'm just writing the short form of orange is org. The market value is orange market goods and services is equals to uh, 35,000, and juice market value of goods and services is 40,000. But I already told you about the uh, double counting concept. So you have to subtract 25,000 from 45,000, because this 25,000 is a revenue of I mean juice, revenue of orange incorporate, right? If you subtract it, you will get 15,000. Now you can add the market value of two of these company, uh, of their goods and services. uh, the total market value of goods and services from the product approach is 35,000 plus 15,000, which is equals to 50,000, right? 50,000 is the total value added, right?